What's good, guys? It's Nick. I appreciate you hopping in and getting a listen on some things I'm looking at within AMC. Sorry for the late video here. I literally about had a heat stroke on my bike ride. Don't know why I thought it was a good idea to hit a 12-mile bike ride in 95-degree weather. But instead of touting about it like good old Gasparino, I'm going to give you some quick insight to what I saw today, some key trends, and my thoughts on the movement going forward. There's a couple different scenarios I want to look at and just bring some light to. So before we get into it, if you could, leave a like and subscribe, give me a comment. It always just kind of helps the YouTube algorithm. So if that is something you could do, if you enjoy the content that I put out, that really helps kind of bring awareness to others and give some clarity to people that might be lost within this play. So as always, not a licensed financial advisor. I do hold my Series 763 and my SIE, so take what I say with a grain of salt. Everything that I do say is just an educated opinion at the end of the day. I don't control the stock price as much as I would love to, but it's good to kind of project things and give you my viewpoints. Gonna try and cut down on the ums. Apparently that was a lot of my video from Sunday, so working on that, kind of keeping things clear in regards to technical analysis and thought processes. So hop into it. Not going to give you the whole spiel on the weekly and everything else like that. I know that I do that from time to time, but I just want to make these a little bit more concise. So this is just the yearly candles, the daily candles for the last couple years. I added in a couple more regression channels just so you could kind of see different points of resistance that can turn support or vice versa within. I know I only had a few in here before, so just I know more lines. Great, Nick. I'm really looking forward to that. But I do think it plays a factor, just brings some clarity to past movements and comparisons. So I just want to kind of hop in here. A few things I'm looking at. First off, I have the VPR pulled up. So this is your 1635 mark. 1640, it's really 1635 when you get into the micro of things. This kind of gives us a clear runway, or at least some low VPR. I don't want to say clear runway quite yet, but gives us some space within to move to the upside, kind of an air pocket, if you would say, towards that 1884 mark. So that's a good area that I like to be in, anywhere within the 1640 or 1635 to 1884. Then on the other side of 1884 is kind of what we can talk about later in the video. But I did just kind of want to highlight that, just kind of the strength that we can have within and some different volatilities throughout. Underneath this, and this is something I'll hit on a little bit later in this video as well, you do have a gap under about 1570, 1575 range. So if we were to somehow slip that in some crazy market event, that's when I am leaning towards a possibility of filling that gap quick. It's about, I want to say, an 8% drop off of today's close to fill that roughly. So I don't want to just leave it behind fully. It's going to be in the back of my mind. I don't know if it's necessarily going to need to be filled. As we get kind of into more of the micro or even macro analysis, you'll kind of see where the strength comes from there. So just wanted to highlight these ranges because under that, I don't know if we're going to see below 1475 again. I don't want to say ever. Obviously, I don't know the complete future, whatever splits or anything of that nature might come about. So just want to kind of highlight these VPR regions above 1635 to 1884 is good. I would love to clear this 1884 and really fill up the zone here. Previous breakout range from January, and then you got the 22.5, which is where that 200 SMA comes into play. Thought it was awesome to hear Ranch talk about 200 SMA and the 50 EMA. This was something that I was taught on the desk a long time ago. I don't really use a ton of other EMAs, to be honest, or SMAs for that matter. So to hear him highlight that and look at it historically, I thought that was awesome. I know it kind of deters some people because it gives them the idea that both have to be completed or that we're not crossing the 200 SMA until late into September or October. I don't think that's the case. I just think it's cool that he's using them and kind of seeing the significance of them within the YouTube kind of ape realm. So I'm going to take out VPR here real quick, just because on Thinkorswim it kind of gets a little bit clouded within the charting. So yes, I know, a lot of lines, whatever. If you don't like them, that just sucks. I mean, I guess you're gonna have to put up with it for the rest of the video, but they do hold weight. So I'll kind of get into things that I'm looking at in regards to comparisons. Then we'll get into a little bit more of the micro and upcoming movements. So these are your ascendant support channels. Trading ranges is what I refer to them as. Probably better to say channels, just because they are ascending channels, versus trading ranges. You don't have to get super technical about it. Anyways, some things and similarities that really stick out to me is everyone keeps trying to pick the fractal. Are we in June? Are we in January? Is it 34 run? Things like that. And I keep saying that it's not going to be one for one ever. There's market conditions, which I'm going to show you here shortly, that kind of deters the fractal theory, and different events or things that take place that just completely throw these freaking bar patterns out the window. I don't use them, never honestly came across them until I kind of got more in depth within retail trading. I think this movement kind of just generated them, to be honest. I think they hold weight, but I'll never make an assumption on something just because of a fractal. So now that that's behind us, we can kind of look more in detail as to similarities that I personally am looking at, and why I think, I know it coincides with a fractal idea, but it's just hard to deny the movements. I've had the weekly analysis where you can compare the 200 SMA, the weekly analysis where you can compare the 200 SMA movements and crossovers to where it kind of signify that where we're at right now is both a combination of the June and the 34 run, also a little bit of January, so there's different velocity metrics within. But for the sake of the video, I'm just going to kind of show the most recent one I've been looking at. You can kind of see here, I'll tie in market conditions here shortly. When we got tripped off of, well, I guess I should show you kind of where these regression channels come from, because I know there's probably someone out there that are like, oh, you went off a wick, not a body. It's like, well, I was always taught to hit body resistance and supports, and then the wicks can kind of confirm that channel for you if it aligns well. So these are some ones that I just put on here rather quick. Again, just got done with a bike ride about, gosh, probably an hour and a half now. Feels like it was freaking 10 minutes ago with how I'm feeling right now. But what I'm trying to say here is just these channels play in a major factor to the downside as well. So what I'm comparing here is the start, or kind of the beginning, from a similar high of our 30-ish range leading up to the 34 run. So you kind of got your deep dives, you caught a little bit support on some of these and kind of just kept falling down beneath. You got a wick down here, so this is kind of the significance. You kind of tested this trading range here, came back up off of it. I don't need to go step by step on these, but you get this W shape, a higher low, based on comparison from where you kind of fell off. You got a higher high, came down, came back up, and then had this kind of movement with a lower low here. So this is what's really, maybe not now, but what seemed to be tripping up a lot of people here was like, oh, we haven't had a lower low yet. We need to go lower. There's gaps at freaking, I don't even know what it was, 8 something, 9 something, which I'm not gonna deny. Like, yeah, maybe there is some gaps down there, but this lower low, I think, threw a lot of people for a curveball, because they were simply using bars pattern and not necessarily the full market dynamics of things. So when this occurred, first off, I'm just going to show you why I don't think this lower low is significant with where we're currently at. So you get this deep push down with your new low at this time. You get this deep push down somewhat of a double bottom. This candle here has the lower wick, just like this one, followed by a kind of explosive move to the upside, coming back up to test this channel. If I'm comparing these two, I would say it's kind of this right here, coming back up, and then it comes back down underneath your standard deviation band. Same thing right here, standard deviation band, and then you get kind of your second formation or second points of that W, and you get a bit of a double bottom, more so just like a consolidation down here, respecting that range. So I'm going to compare the two with this, and then you get this push up, which is a new higher high in recent, meaning it came back above your drop off point. Well, that's your new higher high. This one you do get a steeper retrace, but just know this is beginning of February. Markets were in some turmoil from all the Russia crap going on at the time. So there's a couple ways where it can get a little bit, I don't want to say foggy, because I'll show you on SPY here why this makes sense in a second. But this dip here, there's a few things that it could be in conjunction with. But you got this push up, a little bit of a pull down. Then you can argue that this here is your push up. I know you get a bit of a higher one, so some people would say, oh well, it's this one. Like, yes and no. Like, again, different market dynamics involved with this. So if we're playing out my scenario where I say that this is your second push up right here and right here, you'll notice here that we touched the top of this channel and then came back down, and you kind of got, let me double check here. So here's the middle, your W into your M. Okay, yeah, sorry. So, yeah, okay, sorry for the confusion there. I'm psyching myself out making these hypotheticals from what people said in history. But here you got your dip down. I'm going to associate this kind of dip down, like this style movement here is going to be all in the same. I know it's multiple days, different market conditions. This one obviously had more dramatic market conditions at the beginning of June. We all saw that. And you kind of got the middle line of your M to be right here. This is kind of the comparison I'm using in regards to these. And then if you notice, you got your pop back up, but you're lower than your previous high zone, which would put you right here. And then you kind of nosedive down. You caught some support here and kind of just fell off. So yes, we went and touched this lower trading range, giving us a lower low because it is here. But if you notice here, what these dates are, 3/11, 3/14, and then 3/15. So 3/11, 3/14, 3/15. So if you hop over to SPY, I was just kind of looking at this earlier after bell as well. So this is the 4 hour. I used the 4 hour just for purposes of catching after hours, so we're not kind of missing the extreme movement that I think gave us that lower low on that day, or at least the volatility that they used. So let me just zoom in on this side real quick, and so we can compare the two here. So 3/11, 3/14, and 3/15. So if you look back, obviously we had a lot of turmoil leading up into it. We got that deep push down coming off of February, kind of that extreme volatility region. So different market dynamics at the time, but this is 3/11. So this is the first 4 hour candle. In pre-market, you had a high of 433 roughly, and in the same day you dropped all the way down to 419. So 20, what was it, 433? 433 to 419, yeah. Literally a 13, 14 point move within a day. I know today we had a 10-point move, but I'm just saying like this kind of volatility is what led to, because like here's your 311 and then into 314. So that deep kind of push down is what gave you this push down within AMC. And then after the weekend, this is your 314. We had a nasty red day on the market. People literally thought we were going to crash, which, to be fair, within the volatility of the time frame, I don't blame them. I took precautions late January to actually close out a lot of, not AMC, a lot of other positions that I was long on at the end of January because I knew all this Russia crap was gonna tumble into something like this. But anyways, this is your 314. So you kind of got a little bit of relief and then continued falling off. And then 315, luckily, in pre-market, probably mixture of PPP, plunge protection team, and different stuff within there. But if you notice here, this is 315. So your lower low, in reality, if this is 314, I think your low should be right here in this region. Like this drop into this next trading range doesn't make sense to me, but it does with the market, obviously, in the volatility, given the shorts more pressure or more strength to kind of gap it down over the weekend. So let's say this was your bottom. Well, this is a higher low than what this is here. So when we're getting into kind of the M style and that push down, people were saying, oh, we need to go lower, we need to create a lower low if we're going to match that same M style on the outside leg. I don't think so, because if we didn't have those market conditions, they're different than what they currently are, have been recently. I know I'll get into that a little bit more here. This would have been your low, which is still higher than here. So in this region here, having this low kind of carve out zone is perfectly fine with me if I'm comparing the two. And then you'll notice kind of from 613, this whole entire week was pretty choppy on the market. Because if we go over to this, it's kind of crazy. We're going to have to throw this chart down because the market got dumped on. Yeah, look at this move. This is crazy. 613 was my birthday too, so that was a fun morning to wake up to. Luckily I was hedged. But if we look into 613, I mean this was coming off of 6.9, 6.10, 6.12, 6.13. So this kind of movement here, you notice how like we got this kind of area of chop because you're like, oh, okay, well if you're comparing it to this, that would mean we should be up past 34 and this was our peak and we're dropping now. That's not what I'm saying. I'm just saying that these all match up and you kind of get this kind of floppy movement because of the recent volatility within the market, because this is your 613 zone, kind of get some chop, move around, pop up, give you this movement, then we get yanked down heavy, find our local bottom, broad market wise, at 617. 617 would, which is funny enough, we were green that day. Yeah, that's hilarious. So we kind of get this choppy zone to where it is a bit of a gray area when comparing the fractals here or similar style movements. So this zone is all kind of comprised a bit within. I think like if you kind of took out this part and just shifted this over, I know that sounds so uneducated, but it gives you kind of a comparison in regards to, again, this zone. Look at what we're doing within this volatility region, coming all the way up here, back down here, back up here, like constant 2% swings within an index ETF. So with all that volatility, I think it's still fair to compare this to the March run into 34. So this is kind of, if you notice here, you got a lower low, and if we're comparing this, came up back here, got a lower low, and this is kind of your starting bar. So it's weird to explain, but within this volatility of the market, a lot of this movement can be stretched and kind of delayed. Like they're obviously were preventing us from hitting 1640, 1635 range at first. So long story short is I think we are still kind of in this 34 style run, and what this is here is kind of this movement right here is going to be somewhat similar to this movement here where we went up and tested 1640, 1635, got a slight retrace, and we did push up, but because of different scenarios within, they wanted to contain us from kind of breaking into this new trading range. But when we get in on the micros, it's going to make more sense here to where it kind of got stopped here at this resistance. This one here, if you're on the daily, it always messes these up on the 4 hour. Oh wait, the 4 hour. Okay, yeah, no, that makes sense. We came up, tested the top of the trading range, and we actually closed back underneath this line here. So I know it's not 1-for-1 on these regression channels. It's not going to be, but they don't want us up above this region. And I think there's very good reason for that, because a lot of people are starting to catch on. Like, this kind of flare motion is very similar to the 34 run. And then we started getting our bigger candles. So you could argue that this one is even one of these two candles, and this kind of pullback is this red candle. Like, there's different areas within where I don't know if it's going to be day for day, but I still think we're following this style of movement. They're pulling us under, trying to keep us underneath this regression line and hold us within. But if you notice here, we're approaching a pretty heavy kind of triangle here, to where if it breaks down, I don't want to see that, because I want to hold that 1572 mark that I mentioned, which is about your peak on the body here. Because if this breaks down, you're most likely going to get 1572 range. If 1572 breaks, you are going to find 1535, fill that gap, and then it's going to act like a spring and get some crazy velocity behind it. But I don't forecast that to be the case. Like I said, I think something that we see tomorrow is honestly trading right within this region, not all day by any means. I think once we break out of this zone, we're gonna get a nasty pop. Like, there is a high chance that we could run up and test this upper 18s tomorrow. I know that sounds so crazy to say, but this is gonna relieve a lot of pressure within. And when that happens, if we don't break down, if SPY wants to stay up and the Qs continue running with different earnings coming through, which are just kind of blowing my mind, to be honest, but it doesn't surprise me, I could see us potentially breaking and testing 1884, I can't believe I'm saying this, tomorrow or Thursday. I think it's going to be a pretty big movement. That's about an 80% chance of happening. Again, don't trade off of these percentages. But then the other 20% is where we kind of break out, test this trading range, maybe crack above it, and then work our way trickle effect, and then shoot off. Something somewhat similar to this, where we come up and come back down. It's kind of hard to say. I think tomorrow could honestly surprise a lot of people after the day we had today. I know a lot of people got pretty discouraged within the social sentiment, but I know I'm rambling a lot, so kind of want to get more into the micro before I waste more of your time at almost midnight. So I'll pop over to the 4 hour. This was one thing that I really wanted to kind of focus on or hit on here. And this is where you can kind of see some more of those similarities that I mentioned on the 34 build-up and this kind of chop zone. Like, if you see it, like, look at it's like a coil just kind of being wrapped up and then being let loose, coming back down, more market conditions. And then I really like this kind of formation on the 4 hour. That's extremely good to see. But before we get any further in that, and I keep rambling, I do want to, let me just zoom out one more. Come on. I want to hit on this real quick. So I wish retail, I understand it, but I wish majority retail wasn't so emotionally driven. I think a lot of society could benefit from this, to be honest. With me, if I know the fact, and I don't want to get into certain areas, a topic outside of the market, but like if I know the fact, I believe it, I have conviction in it, I don't let emotions or blasphemy kind of sway me. I know this is money and it's the market, and you sometimes have to go with the flow, but I also know when to call the BS and understand what's sitting in front of me here. So, few things to look at is, I may even send this out tomorrow. There's a nasty speed line kind of running through. There's a couple different ones you can take this off of. Honestly, you could go off of arguably down here and hit a speed line that goes up through. So what I'm saying here is we're in a crazy nasty uptrend still. We just haven't fully caught our elevator. So what I like to kind of reference is stair stepping until we find our elevator. A lot of times when that happens, you get these explosive moves, aggressive back test to kind of confirm that the demand was on the other side of it. We've literally seen it the whole time. Like here's 1533 down to 1407. Like that was a much more dramatic movement. I mean, we'll get into percentages in a sec, but we've seen these dramatic pullbacks and movements happen constantly over the last 1 to 2 week period, roughly 2 weeks, to where when I saw this today, my initial reaction was obviously from the 4 hour it looks worse. Intraday, we didn't really get a steep sell off until after lunch. But when I saw this today, it kind of just made me step back and like look at some other scenarios here. Like this one, we went up to 1614, almost tested that line, and then we obviously had CPI data, everything like that. Came up and tested here, but then we ultimately closed down at 1510. So that's a whole dollar movement. Here, to be honest, we opened at, and it depends where you get, we got a little volatile here. 1692 roughly, shot up to 1781. Love to see it. Went from 1781 down to a close of 1636. So sure, that's a nasty thing to kind of mentally deal with or look at when you saw those extreme gains up here and then them kind of tumble. But in reality, it's nothing new, to be honest. The higher up we continue to get, the more dramatic some of these movements can be. But to withstand them from a technical standpoint, like things you just can't argue, and also emotionally withstand them, I believe that, I don't want to teeter on FA, but I believe like you're gonna reap the rewards of your patience. So this isn't for people playing options saying to bag hold options and YOLO a bunch of weeklies or anything like that. I'm not saying that. I'm just saying the overall movement of the stock. Like if you look here, we got the cross of your standard deviation with the 50 EMA and the 200 SMA way back here. Kind of came back down, a little fake out. I actually mentioned that they might do this little scoop here to make it appear to be that way. And we got this explosive move to the upside and use the 200 as a support. Got another crossover. And then I've always mentioned that when we have these crossovers completed, the most bullish movements come above the standard deviation line. So we've stayed above the standard deviation line almost this whole time, regardless of these nasty pullbacks. Usually the times when you see them, not always, but these standard deviation bands, when you pierce them, usually signifies that there's going to be some consolidation from the up and the downside. So we've seen it on both ends here. Obviously up here, a slight bit of consolidation. Of course, they over-exaggerate it. Up here, slight bit of consolidation, big over-exaggeration, trying to keep it under the regression channel. And then we kind of broke it back to the upside because the demand was still there. Same thing here. Broke the top, and we honestly didn't get any pullbacks until end of day yesterday. And then it shot back up to close. Here, we honestly got a pretty strong push through it, and they kind of use it to their advantage along with major suppression within the order book and different kinds of wall spoofing if you have Bookmap. a bunch of stuff kind of took place to where they just trickled it down until they were right above some bigger micro supports, and then they just yanked it and held it down. They wouldn't bring it back above water, which cool, dude. You're above your trade from 1780. Anything that you have 55 days on loan, which is the average share on loan price, I think roughly puts you back to this zone here, 420. You guys didn't see the hand gesture, but anyways, back into this zone here to where they were starting to completely all be underwater. Every single short position from this zone was all underwater up above here. So you got the psychological aspect of it on the short side of things, and then obviously they don't want to lose, and the pressure being built back up, like us kind of not buying their BS, because you see your OBVs climbing up along with RSI. You get a good divergence sometimes to cool off RSI. Here's a nice divergence. And another one as we're stair stepping. Love this action here. So honestly, cooled off the RSI, caught the standard deviation line on the 4 hour. This was something I referenced in my tweet. On this wick, I was getting a little sweaty, not gonna lie. I didn't want to break below this, but what we're doing here, so I'm glad we filled a gap. I know we still have that other one, but we're back testing our breakout zones. So obviously this one didn't fully get back tested. That's what kind of gave us the gap there. But when this occurs, when we trade down here, kind of break up to the top side, and then we're back testing our breakout zone. This one wanted to take it almost all the way down to this wick. It wasn't needed because luckily standard deviation band or line caught it, and then we closed back above this key macro. So into tomorrow, what I'd really like to see, I know I just mentioned it, but before I wrap up the video here, into tomorrow, I would love to kind of respect this line. There's a chance, depending on broad market, I'm pretty sure broad market might rip tomorrow, to be honest, from some of these earnings. There is a chance, though, that they could try and pull some crap and slip it this down to this 1625 range. If that doesn't hold, they may try and inflict more fear and test 16. The main region I'm worried about, where I think they could go fill the gap, is sub about 1572 range on that VPR zone. So if that somehow happens, that's when I think the gap could get filled. That's worst case scenario. Just talking about kind of in the morning, but best case scenario, or kind of more the side that I'm leaning on, is we get a slight maybe pullback. I don't want to leave another gap preferably, but if markets are ripping and we got that kind of candle to close today, I think we could fucking rip, to be honest. So I do want to kind of trade within this region down here and pre-market, maybe another step up similar to this, not quite as dramatic, so we don't leave any gaps on the dailies because people love that. But anyways, I think we trade a little sideways and open, maybe come up to 1665, 1650 before open. I'd like not to leave a gap though, of course, so I don't want that. I'm just kind of talking about what could happen. But if we do open around this zone, kind of low 1640s, we could kind of have a couple wick or maybe a wick down beneath and then rip up. Those are kind of my favorite movements. Just gives us the most strength behind them. And if we keep the wick higher than 1626 along with lower than 1783, I mean, that gives us an inside bar for a continuation or kind of uptrend reversal off of this micro pullback into Thursday. So a lot of big good scenarios potentially playing out here. I'm not bearish, I'll be honest, when that situation does come around, when it does. But in the meantime, I'm still liking the position we're in. I'd like to get above this regression channel, close within this region, like 1884 to 1750 would be huge on the week. not needed, but that would be huge on the week. I think there is a chance if 1884 gets broken, like I said, we can go ahead and go test this 22.5 zone. So that's what I got for you tonight. Sorry it's a little bit longer. Hopefully that gives a good kind of depiction of things I'm looking at. Like I said, leave a like, subscribe, comment, hop in Rico's Discord. We're in there all the time, kind of comparing ideas and things we're looking at. But great group of traders in there with a wealth of knowledge. So I think everyone could benefit from that. Slight little plug. But appreciate you watching. Hope you have a great rest of your night, morning, wherever the heck you are. Love you all, and look forward to seeing how tomorrow plays out.